right, ladies and gentlemen, we are here with another new episode of Pitch to Profit with your host, myself, George Csahiouni. And today we have a fantastic guest. His name is Thomas Kadar from the Tom Kadar Brokerage and Realty Group. He has over 13 years of experience in the real estate industry, runs the gamut in many different areas of the real estate markets, and is going to be a great source of information and a wealth of knowledge for our audience to talk a little bit about how to invest in real estate or what might be some of the better areas to invest in real estate if you are a small to medium-sized business owner with some additional capital that you are looking to put to work. Hey, Tom, how are you today?
I'm good, George. Thanks for having me on, and I really appreciate it.
Yeah, awesome. We're very delighted to have you here on the show today. Just to open up, Tom, why don't you tell us a little bit about, who you are and what it is that you do with your group and your team in the market currently?
Sure, I'll try not to go on for too long. I'm pretty busy with lots of different stuff, but yeah, like you mentioned, I've had my broker's license for about 13 years now. I started in residential mainly, and then quickly moved over to commercial real estate, uh, pretty much across all different types of asset classes. But my main focuses are currently multifamily and boutique hotels and a couple other things. But so from there, I am the broker and owner of a KW franchise here in Costa Mesa, California. We do have I do have a commercial team in the office here with about 4 or 5 people that do commercial real estate transactions. Uh, Within that team, I also have a wholesaling kind of company, which we can get into detail about that and how wholesaling works on real estate, assigning contracts, things like that. And then some side businesses I have. I have two companies that do property management, one in kind of the Inland Empire here, and then another one kind of in the desert or towards Joshua Tree. We manage about 500 long-term rentals in between single family and multifamily properties for that. And then I have another company that does short-term rental management with about 40 doors in the markets of Big Bear Lake, Big Bear City, and Joshua Tree. And then beyond that, more in the last year or two, we have a development company. It's called bluekeyhosting.com if you want to check that one out. But that one does build to Airbnb types of properties, specifically ground up development for very unique designs that are done specifically to rent out on Airbnb and try and get the top dollar for those types of properties. So I'm
Awesome.
not bored. Yeah.
You definitely have a full plate. Obviously, you have a ton of experience. I'm sure you have a wealth of knowledge to share with us, which is fantastic for our audience. So, one of the things, our audience that we come and get asked here at our group, Swoop Business Solutions, with regards to, potential investments, is what's a safe place to put your money into and where can we get a decent earning on our money for all of the business owners that we commonly work with. And before we kind of get into some of those components that maybe you would recommend, just on a high level, talking about real estate, what's your outlook from your take being in the business on so many different levels with regards to the market? Do you think 2024, are you bullish on the market? What are certain areas that you think are going to be, very positive, and maybe what are some areas that you think to be cautious of?
Yeah, definitely. I mean, I'm sure your audience is, they're well-educated guys. They definitely see that the market over the last year has kind of taken a pause. The interest rates obviously shot up very, very quickly in the last year here to the 7-8% range. Very recently, actually, they did come down towards the 6.5 when the Fed announced that they're going to be kind of pausing increases and doing some cuts in the coming first quarter here. That remains to be seen. I don't know. That's kind of I don't have my crystal ball here, so I can't really predict that. But I personally am bullish. I might be biased. I'm in real estate, so I'm definitely want things to kind of keep moving along. But as far as the market's concerned, yeah, I mean, all across the board in a lot of different markets, you are seeing very limited inventory. So those owners that specifically we're talking about residential here, those owners that have had properties and bought at those low rates that we had during COVID and kind of those 3 or 4%, they're basically holding on and seeing that it doesn't make sense to sell this property, buy something else at a 7% interest rate, and basically have double the payment for half the house. It just doesn't
Right.
make sense. So that's why we're seeing kind of in the markets where I am. I'm in Southern California, but a lot of markets across the country, you're just seeing very limited inventory, and that's why properties are still maintaining those prices that they've had for the time being. So as far as residential is concerned, I'm still fairly bullish. I think the market's going to do very well as the interest rates start ticking down here. We already have limited inventory, and I think we should have a steady amount of additional inventory come on. But there's a lot of buyers on the sidelines right now that just have a lot of cash saved up from COVID and haven't done anything with it, and they definitely want to invest it because of inflation kind of keep going up and up and up. They have to put it in real estate or some sort of investment to actually hold on and have that keep growing for them. So
I got
uh,
you.
yeah, so that to answer your question, yes, I'm 100% bullish on the market here for 2024.
Yeah, well, that's really good to hear, especially if you have some money to move. As you mentioned, people definitely have some money saved up. A lot of folks. So if you are a business owner or any individual or group that maybe has some extra cash flow, maybe you're doing well with business, you have that money saved up, whether it be a couple $100,000, $500,000, $1 million. What are some of the better places in the market, to park that money or get that money to work to get a nice return? I mean, would you say, just on the highest levels first, is residential versus commercial, what's a better play? And keep in mind that we're typically talking about, for our audience today, we're talking about business minded individuals, but also individuals that are owner operators, right? So they might not have a lot of bandwidth with regards to participating very actively in the market. So what are some of your suggestions there for those types of individuals?
Yeah, so I mean, everyone's very different on kind of their investment goals. Some people are just, they don't need the cash flow. They just want to park it somewhere and let the real estate appreciate. Some people are specifically looking for cash flow because they're looking to replace other income. So I mean, I really want to dive deep into, whoever we really talk to. But what you did mention, that owner operators of businesses, I mean, a lot of these owner operators are leasing a space currently, so it might make sense for them to buy a space and actually recapture that type of that lease that they're paying every month, and then have a real estate that they're basically paying a lease to themselves and have the property appreciate, right? I
I
mean,
got you.
yeah, I think that would be a great first investment for them if they're looking to grow a real estate portfolio. But as far as
So
commercial,
just real quick, yeah,
yeah,
just real quick on that, because I think that's a really interesting point before we go a little further. So
yeah,
basically, what you're saying is if I'm John, let's say John at John's Pizza or Susie at Susie's Salon, I
right,
currently have an active lease on my location. Whether I keep that location or maybe I look to buy another location where I could own that facility, right?
right.
Or the owner. What would this setup look like? I mean, do I create a separate LLC? You mentioned basically a lease back, if I'm understanding correctly. Like, what would be the basic scenario there?
Yeah, so I mean, if you're leasing a space currently, I mean, you'd want to take a look at your lease and see, is it ending pretty soon, or do you have a number of options there? Maybe the owner is tired of kind of having that property. Maybe they need cash. That's something you can negotiate directly with the owner and basically have a lease to purchase option, like you mentioned, or just have a straight purchase where you could even do a seller financing and have them help you kind of buy the property.
Sure.
That would make sense. Or if you're looking to expand, like you said, you can look at other options and kind of grow your real estate kind of holdings that way. But yeah, I mean, there's a lot of different options in
Sure.
that regard. Yeah. Um,
Okay.
yeah. So
Well,
I mean, I was going to expand further on
sure.
commercial. It's definitely want to be cautious right now. I mean, I'm sure that your audience is familiar with kind of the commercial real estate office market is something to be definitely cautious about. So, just be aware if you are in an office building. I mean, it could be a very good purchase for you personally if you're looking to kind of own that real estate that you're in. But just be aware, some office product, typically the 3 or 5 floors are above those larger office product. They're hurting a lot right now because a lot of people are working from home. The vacancy rates in those types of buildings are pretty high. So a lot of banks, I mean, in the coming year or two here, when they start readjusting to those current interest rates, they're going to start losing out, and those banks are going to recapture those buildings. So just be aware of that before you make an offer on your office building there.
Gotcha, for sure.
But
The
yeah,
off market, tentative, be careful on that market, for sure, just because of potential vacancy rates. And also because if I'm understanding correctly, just to further clarify, a lot of the lenders against those office buildings are going to be basically taking a hit because of the current vacancy rates. And, just to try to sustain those properties, there could be some issues there. Is that what we're saying?
yeah, that's absolutely right. I mean, typically not for smaller businesses. They're typically in one-story types of buildings. So those buildings are actually still doing pretty well, and there's a pretty good demand for them. So I wouldn't. I mean, if you want to buy that, obviously connect with a local commercial broker. They'll be able to tell you the comps and kind of what the market rates are going to be for
Sure.
something like that. But yeah, I think that's a great idea for a small business owner. If it's a office building, a retail building, if it's a warehouse where they typically do import export or something like that, then those are all great opportunities to buy your first kind of investment property. But if we want to expand further, I mean, I can dive into short-term rentals. I think that's
Well,
a great market right now. But yeah, go
yeah, well,
ahead.
real quick, let's talk about the short-term rentals for sure. But real quick, so it sounds like if I'm a business owner, and so like not only, and I think you just brought up a good point. I'd like to just maybe highlight is that not only can I at least try to acquire my own property that I'm operating at, or maybe a property that I want to own to then further operate my business, but it sounds like too, a lower lift and maybe a better comfortability for the business owner is to stay within the fringe of things they already know. Like you mentioned, warehouse space, right? If I'm a drop shipper or a manufacturer or somebody that has warehouse space, might look to buy that because I'm already familiar with that just from operating within that framework, right? So I think that brings up a really good point. Maybe start close to home because then you probably have a better idea of value and just kind of the overall type of facility. So I think that's a
Yeah, I
great
mean, you're your own best client, right? I mean, if you know your business has been around, 3 years or 5 years, I mean, and you're you're paying a lease to a landlord anyway, you might as well pay it to yourself, right?
I,
And on top of that, I should add, I mean, there's really good financing for business owners. There's SBA financing. I'm sure you're familiar with that. Your listeners are Small Business Association, where the government basically steps in and says, hey, if you want to buy a building for a business or a business itself or the combination of thereof, you can go as low as 10% down on something like that, and the rates are, fairly good. But it might make sense to, you're looking at your lease rate and you compare it to buying a new building. It might be pretty much the same that you're paying, plus you have a property and you're building equity at the same time here. So,
yeah,
uh,
that's great info.
yeah, I think it's definitely something that you should kind of explore if you're in that
Well,
space.
let's talk about moving on just a little bit. Let's talk about, and maybe this gets into short-term rentals. I'm not quite sure, but I think it might. Is okay. So let's say I have some disposable income. I have whether it's cash flow or I have money, in the bank, right, that I want to deploy into an investment. We mentioned, what's close to us as a business owner, but what about some just pure real estate investments, whether it's a short-term rental or like a multifamily or maybe even an investment fund, right? Like what are some of the areas there maybe that you could touch on that might be lower lift, and what are some of the returns or what are some of the expectations if I'm an owner or the audience that's listening is an owner where I could deploy some cash in maybe some different sandboxes or buckets of real estate investment?
Yeah, definitely. I mean, I was a real estate broker for about 13, 14 years, but I really began my investing journey about maybe 3 years ago, kind of during the COVID. time frame, that's when I really had some extra cash that I could invest. And I started with smaller multifamily kind of locally here to me, which is makes sense. It's a very good asset class. It's very predictable. Um, the only kind of issue after a certain point is if you want to grow that portfolio, it just becomes a lot harder unless you're actively in it and you're doing value add types of opportunities. If you're just looking to park cash, it's a really good investment class. Right now it's a little bit tough. I mean, with the interest rates where they are, depending on the cap rates and the income levels of the particular property, I mean, you might have to put as much as 50, 60, 70% down. So I mean, it's not really feasible for some kind of an investment unless you're fine with that and you're fine with that type of income and you can refinance down the line, then that works for you. But
Yeah,
um
real quick on that, I would just say that so like even if you could make an initial investment on a deal or two at 30, call it 30 to 60% money down, because especially in the commercial market, the financing is a little tighter, right? So even if you could do that, then the question becomes how many more investments can you do and how quickly, right? Because you either have to recycle that money, if I'm not mistaken, but like as you mentioned, like a refi somewhere down the road, you can maybe pull some cash out to maybe do another acquisition, or you have to accumulate more funds, right, to be able to
right.
continue. So,
I will make a quick distinction between, so residential financing covers everything from 2 to 4 units up to 4 units. So right now they passed some new loan options for 2 to 4 units to put as little as 5 or 10% down.
okay,
Obviously, you have to qualify for that, and they might say you might have to live in a unit, and you have to kind of play with the numbers and work with a mortgage broker that really knows what they're doing.
sure.
But commercial is 5+ units. So if you go in that category, then that definitely falls in what we're talking about here, 30 to 60% down and just kind of more aggressive interest rates. But yeah, those are the two kind of main classes for multifamily.
I gotcha. And so, I mean, from your own preference, I know you dabble in a little bit of all of this. I mean, what do you think is, maybe like a lower lift, decent yield? Would it be like multifamily? Would it be like short-term rentals? Or would it be like investing in a group like yours that's gathering investment to deploy into the market? Like, what does that look like for
Yeah,
someone who may want to be maybe semi hands off to hands off on an
Yeah,
investment?
I appreciate the shameless plug you did there for my group, but yeah, I mean, it's really about whatever anyone's comfortable with. I mean, if it's multifamily and you can find an apartment building that's kind of close to where you live and you can kind of manage it easily, or you have a team that's set up as far as the property manager, the contractor, the handyman, and all these little components, the mortgage broker, the real estate broker, all these components kind of have to be on a team and ready for you to kind of handle that. If you don't have that, then yeah, I would recommend working with a syndicator or somebody who kind of does this professionally. And then you would have a lot of different options open to you. For example, there's syndicators in Arizona or Texas that invest in 150 or 300 unit apartment buildings. And you can usually these syndicators, they ask for minimum 50,000 or $100,000. They promise returns of about 6 to 8%, and then a 2x return in about 5 to 7 years. That's the usual kind of syndication that a lot of these groups are promising. Mine is similar, a bit similar, but we focus on different asset classes right now, simply because the interest rates are a lot more aggressive. So we're seeing values and opportunities more in the smaller boutique hotel space, because those are asset classes that not only are they not really attacked by smaller investors or the large funds. So there's kind of this middle ground in these properties. So there's less people kind of searching for them. The sellers are offering seller financing, so we can ask for negotiate better terms on the financing, which is obviously key in this market. And there's a lot more value add. So if we fix it up and do everything we need to, we can add a lot more value and create a lot more equity and appreciation in that property than something like a multifamily or something along those lines. Yeah.
Gotcha. So what you're saying is there's a market there in like short-term rentals, boutique hotels that is too big for the small guys, right? And then too small for the big guys. The big guys
Yeah,
being
that number is around maybe 2 to 10 million, 2 to 5 million, somewhere in that range where we like to play.
sure.
Too
And
too
then
big.
in that class, what you're saying is you're still getting good deals. Basically, you're still able to source the deal on a consistent basis that has decent upsides, whether it's through value adds or improvements. You also mentioned some seller financing, so you're able to structure deals there that make them attainable. It sounds like, and then appetizing with upside. So that's
Yeah,
very
definitely.
interesting. Is that something that you would suggest for, like a small to medium sized business owner? Is that something that, they should, again, they may or may not, if they don't have a team, right? They
Right.
probably shouldn't go at that alone for sure, right?
Right. That one's a little bit more complicated. So I'll give you something easier too. I mean, you could definitely, if there's a market you like, maybe with the family, you like to go to, Blue Ridge, Georgia, or somewhere in Tennessee. There's certain like mountainous markets where you could, if you have some extra cash, you can buy a property there. That obviously, I would definitely recommend partnering with somebody that knows what to look for and knows the numbers. But you can buy a property there that you can even visit with your family, during the winter season or the summer, whenever you like. And in the meantime, you could rent out on VRBO, Airbnb, and create an income for yourself too. So, I mean,
Gotcha.
this is a lower lift. It's something that a lot more investors can kind of handle themselves and possibly create some extra cash flow for themselves. So, yeah.
Yeah, that sounds like, that's really interesting too, because there's a lot more benefit. I mean, especially if it's kind of like a first investment or even a one-off investment, that kind of checks a lot of different boxes if you're doing like an Airbnb type of almost like a vacation area home, right? Is what we're
Right.
talking about. And, like you mentioned, so if I'm a business owner and I want to get away or use that home myself, I can obviously block out those times, rent it when I'm gone. So, there's a life benefit to that as well. And
Yeah.
I'm sure there's probably a lot of, tax benefits, I imagine with that. Maybe you could talk a little bit about, everyone talks about in real estate, the various different tax benefits. And I know we could go way down in a rabbit's hole, but, is that really a viable, does that help park or shelter some cash in buying real estate for a business owner? I mean, what does that look like? That
A
if you could
hundred
talk
percent. Yeah,
anything.
100%. I mean, yeah, I mean, we could talk an hour just on the tax benefits alone. Obviously, there's the normal tax benefits of kind of depreciation, and cost segregation, and the normal kind of things that you can deduct on the property. Even traveling out to the property, you can deduct that. So, I mean, then
Sure.
you're traveling there with the family, and then that's all kind of written off. It's your whole vacation, right?
Sure.
But I'll take it a step further. I mean, because I'm a real estate professional on my taxes, which is defined as somebody who spends about 500 or 750 hours plus on managing their own properties. Because
Mm,
I have that designation on my taxes, I'm able to take some additional benefits. And not because I'm a real estate broker and obviously I have all these businesses, I can definitely jump in that. But even a small business owner, possibly not them, but maybe their wife, or maybe but the combination of them, they can also enjoy these benefits. So,
gotcha.
so yeah, that's definitely and so one of the main benefits that I've enjoyed over the last 2 years being a real estate professional is being able to do an accelerated depreciation. So this one's a little bit complicated. I'll kind of go surface level on it, but right now, what for all the properties that I kind of own, I did a cost segregation analysis. So if somebody doesn't know what that is, it's basically breaking out of the individual components of a property as far as the flooring, the HVAC system, the walls, and breaking all these components out on their own depreciation schedule. So
Mm,
normally a depreciation schedule for a residential property is 27 and a half years. So every year you can take off just a fraction of the property's not the land value, but the property's value and depreciate it over time and kind of take that deduction off your taxes. The cost segregation analysis and the accelerated depreciation allows you to basically take a lot of these components in that first year. So I would
gotcha.
buy, let's say, a property for $1 million, 2 or 3 years ago. And in that first year, I was able to take about $250,000 off my taxes based off that property, which was
Gotcha.
which was absolutely insane. They are leveling it down slowly. This year, they're only allowing you to do 80% of that value, and next year it'll be 60%. So this benefit's going away slowly. But things like that in real estate, I mean, just make it a no-brainer to kind of take to invest, obviously.
That is good insight, amazing insight, insider insight that I'm sure is going to pique a lot of our audience's interest for sure. That
Yeah.
they can do some further due diligence on. That is fantastic. Let me ask you, what with regards to, okay, let's say I'm again a business owner and I have a couple of properties, whether it's the Airbnb model or whether it's a couple of 2 to 4 units, or even maybe a small multifamily, maybe 5 units to 15 units, something like that,
Yeah.
right? What's the value for me as a business owner when I make that investment? Because being a landlord is being a landlord. You're getting the calls at night. You do have to have the handyman, as you mentioned. You do have to have, the maintenance person or someone who's going to pick up the phone when that furnace goes out, whatever the case may be. Right. So, and I know you're a property manager of many, many properties indoors. What does that look like? I mean, what's the value? What's the typical cost? I'm sure it varies by area, but typical cost of a property management company, and what do they kind of do for an investor or a property owner?
Yeah, I mean, for definitely anyone owning property, especially small business owners, they definitely don't want to, be picking up a call Saturday at midnight, dealing with a leaky toilet or something like that. So yeah, 100%, I recommend property managers for a long-term investment like the multifamily, 5 to 15, 50 plus units, or the short-term rental, because that's going to be a whole different type of problem set than the long-term rentals. Management fees, I mean, they range anywhere from on the long-term side to I'd say about 5 to 10%. On the short-term side, they probably range at least 20% to 30% on a lot of those types of properties because it's a lot more active. I mean, you have to, deal with every weekend. You have different bookings, you have different coordinating different people, and there's a lot more active kind of stuff that goes into it. But yeah, 100%, I recommend really having a property manager that knows what they're doing, local to the market, understands all these different metrics that you're looking at. They're going to be the ones to protect you from liability issues. Obviously, in California, here where I am, I mean, there's a lot of tenant protection laws. So I'm not sure in Chicago how bad it is here, but yeah, I mean, we have horror stories here of tenants staying in properties for a year or 2 years if things aren't done correctly and not paying rent. So
I got
things
you.
things can get a little crazy. Um,
So how do you know what would be some recommendations for finding a good property manager, regardless of the segment of the market? I mean, should business owners interview two, three, or four of them, or maybe another way to put that is to, like, what are telltale signs of either a good or a bad property manager? Like, what are some insider secrets there?
Yeah, definitely. Yeah, for long-term management, you definitely want somebody that has experience with your type of asset. Obviously, you don't want a single family kind of a property manager handling a 50-unit apartment building, right? There's a lot of different systems that kind of go into all that. So as long as you kind of do your research, you interview them. I mean, there's probably a list of questions that you can ask on kind of their process, how they handle it, how do they handle a new lease, how much do they charge for that, what's their process of onboarding a tenant, what's their kind of day to day, what's their staff look like, how many properties do they manage in your area, do they focus on A class, B class, C class, D class, do they there's just a list that goes on and on for that
Sure,
kind of stuff.
sure.
For the short-term rental side, I mean, you definitely need somebody kind of local to that market, understands the niches. There's even more laws that probably go into the short-term side. You have to have the right permitting for that particular area. You have to have a good guest, kind of onboard process where people come in, people when they leave, is the cleaning process. I mean, all these different things kind of have to be coordinated together and work seamlessly. Otherwise, you're going to have a bad guest experience, a bad review, and that obviously means loss of revenue there for yourself. So, yeah, I mean, there's a lot of different components that come into it. But yeah, you do some research, interview a few different people, and definitely.
Awesome. Awesome, Tom. That's fantastic information. That kind
Yeah.
of leads into, kind of tying this down a little bit, leads into, what I guess the starting point to look for a good investment probably comes with a good broker, right? Somebody and or a broker or somebody, and does a broker act, from my experience, my own personal experience, a broker, where if you develop and cultivate a relationship with them, and maybe you do a deal or two with them, or you they can often act as you kind of are on this podcast as an advisor, right? And I'm not sure if your group, just to kind of use your group as an example, acts as an advisement firm as well, and to what degree. But is that commonplace, and is that really where an investor or a potential owner operator that wants to move some money into the market, is that where they should start? I mean, because that a lot of times the broker is kind of, from my experience, a liaison, to kind of connect a lot of the dots. And they also might have referrals or things of that nature. So,
Yeah, yeah,
what-
100%. I mean, yeah, I have a large team here and I'm set up in Southern California, but I mean, I have a lot of clients that are, sold large assets here and are moving anywhere kind of across the country. So yeah, I do have a good network of people that I'm happy to refer people to. But yeah, I mean, what it really starts from like you said, a consultation type of starting point. I mean, you have to really understand what the client's looking for on a sell side or a buy side, and what their goals are. And I kind of just work backwards from that to really understand and put them in the right category. So that's kind of what we deal with a lot of mom and pop owners here in that sell multifamily buildings, smaller, $1, $2, $3 million. And these are people that have owned these properties for a very long time, and they're just kind of looking for an exit, for kind of just income and not have to deal with the tenants and the toilets. And so it's for them, it's really just selling the property and then either moving into a syndication like the ones I was mentioning earlier about the income, or there's these products called DSTs, deferred sales trust kind of opportunities, and these are very large funds that typically invest in A-class assets. They do about, six or a little lower returns, about 6% returns. They hold for 7 to 10 years, and they also promise a 2x return. So, I mean, I have relationships with a number of those types of companies, and they're very, very safe. I mean, I 100% would recommend that to somebody like, who's just done with real estate and just wants to, kind of keep their capital moving. So that's another option for kind of people.
yeah, that's awesome. Well, Tom, I mean, I think we could talk for hours. Love to have you back on, and we can kind of
Yeah.
segment this out further where we can get into maybe some niche, in-depth, granular conversations.
Yeah.
That being said, until we do that and until the next time, why don't we tell the folks that are listening in, how they could reach you, an email, social, a phone number, whatever you think is best. How would we reach you if they want to connect with you for a consult?
Yeah, that'd be great. Yeah, I'm happy to talk to anybody, even if it's just a consult, just or refer them to somebody. Again, you can find me on Instagram, Tom Kadar, TomKadar. My email address is tom@tomkadar.com. I'll even throw my cell number in there if somebody wants to talk to me. It's 949-933-0488.
Awesome. Well, hey, Tom, thanks a lot. I think you provided a ton of great insight and probably piqued a lot of curiosity for investment purposes. Your experience is invaluable. So we're really delighted to have having you on, and looking forward to the next time we can do this again.
Thanks very much, George. Appreciate the opportunity.
Thank you.